Good morning, traders. Welcome to the Traders Lab. I'm Tom B. Can I please get a screen and audio check in YouTube? Thanks, Dan. How we doing in YouTube? Okay, great. Thanks, Dan. Well, good morning, everybody. Welcome to the Trader Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And you're all welcome to visit the Trader Lab anytime you're in town. Now, the fact that Trader Lab is a virtual environment, that means you can come anytime you like. And there's always activity in the Trader Lab, whether you're trading ETH, no matter where you're located on the planet, there is activity and camaraderie, technical support in the sense of how is your trading, what are other traders doing, and it's the collective experience of leveraging the experience of other traders in the Trader Lab community that help us all do better. Not only that, there's a library of webinars on the process you see here, and also how to integrate a high-tier order flow tool like Bookmap into the equation. In addition, this stream is based on what's called auction market theory. And auction market theory is very simple. It's really what the basis of the market is and what trading really is. Trying to figure out what's too high, what's too low, what's just right. And the thing about that is that this is constantly changing in all time frames and all fractals. And that's what creates our rotations. And if you're a day trader, and even if you're not a day trader, markets are fractal. So if you're a swing trader, it's the same. If you're trading on an annual basis, it's the same. If you're trading ETFs, it's the same. If you're trading futures, it's the same. Markets work a certain way. So if you can learn how the market works, you can take this process once you vet it, which means it has a statistical edge for you, and then you can transfer it to any market you trade. Doesn't matter. So the basis of the Trader Lab is to help traders understand the business of trading, how the market works, why it does what it does, and how at times you get in alignment with it, and only interact with the other participants when you have an edge that favors you. And there's lots of times in the market where you have no edge, yet we are stimulated to do something, and that's all dopamine, adrenaline-based, fear-based, all of that behavior. But that's not what the business of trading is. So we have our human behavior, and then we have the business. Which is it going to be? Are your emotional states going to manage your trading business, or are you going to manage your trading business and manage your emotions? That's the big question. And I think you can get a lot of answers in the Trader Lab, and a lot of other traders have. Why not you? General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, you do remember what happened on Friday. And if you watched the webinar over the weekend, we talked about how on Friday, I was coming in with a long orientation, and by the RTH open, it all got flipped to the short side. And then many traders in Trader Lab, of course, Friday was a unique opportunity, and of course, you have to have a plan for it. Many traders had a very nice day on Friday, and there's also traders who did not. What's the difference? Well, I'm going to share with you the differences between, shall we say, the successful management of the business of trading and not knowing where you are and what you're doing, and not having yet a fully developed business plan or trading plan. Now, so everybody knows, there's no plug and play in trading. The reason we can be compensated is because we're willing to take risk. And because we take stops, we also have overhead and costs of production. Don't be surprised that you're going to take stops. You take stops to preserve your equity. You also take stops because everybody pays. Casinos, which is really our business model, because they're in a similar environment, it's 100% random, they pay the gamblers. Well, we're going to pay also, so you got to get over it. And I always want to say, I don't want to sound insensitive to how we feel about it, but how you feel about it has nothing to do with the business you're in. We need to find a way to separate our feelings from managing what we do versus us learning to manage our feelings. I don't know about you. How many FOMO trades do you think you made? Me, more than I want to remember. How many times have I moved my stop and bailed out? Me, I don't want to remember. You know what I'm saying? Yet I need to remember and not go on to the next trade, because if I can fix those errors, and they are errors, and who is making those decisions? You're going to say, I am. I'm going to say, I am not. The primal wiring, the survival, the fight and flight mechanism that is built into all of us is what's driving the bus. And that's why so many traders I speak to say, you know what? I don't know. I just did it. You know, it's like, boom, this impulse. Well, that impulse is wired into your brain, and you got to learn about it. And you got to learn how to interrupt it. This is what we work on in Trader Lab. Of all the things, and I believe anyone who comes to Trader Lab and does the work can learn how to trade. It's personal belief, and it's happened over and over and over and over again. Traders who are not successful come to Trader Lab and they become successful. They get funded or whatever they're doing their thing, and they turn the corner. Not everybody will turn the corner. Not everybody will be able to manage themselves, and not everybody is even willing to do the work. So, of course, not everybody can become a career trader. But those of you who have that potential, you might be able to realize that potential in Trader Lab. Now, let's talk about Friday. I think we can agree Friday was quite an event, and we took out just about everybody but the kitchen sink. Now, leading into, and that webinar is up in YouTube, and Dan, if you're floating around here, could you post that link from Friday in YouTube, so any of you want to see how we handled Friday's trade? It's going to show you a lot. It's going to show you the upfront situation, the front end of it, and then we get into real time with real-time narration. So you'll be able to see me telling you where to anticipate a trade. Here's the trigger. Here's the trade management, et cetera, et cetera. And you'll see it over and over and over. And you can see that in a lot of the webinars that are in the Trader Lab. Now, when you get selling like you had on Friday, there's a couple of possibilities, and this is called context or market mechanics. One of them is, let's say two. There's two. Of course, there's always many things that can happen, but primarily you can get a gap open continuation today from all the shorts that woke up, over the weekend and read the news about the market jumping out the window, and they want to jump too. So we can get selling, or a gap and selling, or just early selling and then a squeeze. Now, why would we get a squeeze? Because if you get selling in the morning, those sellers can become buyers. They get squeezed out, and then shorts in the market from Friday also can get squeezed. And then once the squeeze is done, the weak hands are out, we can sell it. So the plan for today was either down first, squeeze up to short, or just squeeze to short. But short, short, short. So that's it. Now, that's the scenario coming into today. Now, the next auction is the ETH. The ETH is the last opportunity where traders interact. Now, this sets up the first trade. Now, this is the ETH. This is just before the RTH open. I want to show you this. This is the ETH profile, and we have a couple things that are important. The ETH high. Oh, thanks for playing. We have the ETH mid. We have the overnight volume point of control, and this is important. We're going to come back to that. We have yesterday's volume point of control, which was the retail price. That's high volume. And if you haven't been here, you'll find out about this. ETH low. ETH low has about over a 90% probability, or ETH high. Pick one. Do you feel lucky, as Dirty Harry says? Overnight volume point of control, the highest volume or the retail price. Let's just call it shopping. Let's not get hung up on anything else. We're shoppers. Well, that's too high. That's retail. And that's too low. So we're above Friday's retail price. Maybe that's too low. Not really, but, and we're in here. Now, this is the developing volume point of control in the ETH. Watch. Now, there's over an 80% probability we're going to test this. Now, past performance is not indicative of future results. You got to vet all this for yourselves, you know. So, what are we looking for? RTH open, down first, then up, or up first, then down. Either way, it's short. It's just where. So we have to do something. Now, this has over an 80% probability, and we left it. We are below it. That is, let's talk language. This might, I'm always going to say might because it's always maybe. This might be too high. That's why we're not here anymore. That was the retail price. I'm not paying that. We leave. Now we come to the RTH open. Let's look at that. I didn't get my down. Now this is minutia and this is advanced concepts. You know, Trader Lab is an advanced process. This is not trading 101. This is definitely advanced, but it's something anybody can learn. It's just going to require undoing bad habits and being reliant on indicators to define the condition of the market. If you can look at the market here and understand what the possibilities are, does that give you an edge over your competition? Now, let's come into the microstructure. I was speaking to one of our Trader Lab traders this morning. We were talking about these actual trades. Now, remember, very important. Let me bring you back. And if you have questions, this is the retail price, over 80% probability. The market is short. Remember all those pieces. If the market is lopsided, what can happen? If we open and I don't get selling, then the shorts that are short from the ETH and Friday can get thrown under the bus. Short covering, squeeze, right? Where was the last place it was too high? It's there. So I have a couple of things I can do. I can look here, and this sets up my first, not trade, could be a trade, but the context is down. I'm going to show you a long that turns into a short because they're both correct, except one is counter trend and one is going to be alignment with the trend. This is a counter trend trade. Let me show you. Now, if the trend was up, this would be your long in alignment with the trend if we open lower, but the trend is not up. So if I see a long and I'm looking to get short, I don't know about you, I'm not getting long. I see the long, it tells me don't get short. Does that make sense? Are you guys following? Okay, let's look. This is called, let me just make sure. Okay. VPOC migration. I made it up. And what it is, this is the RTH open. And what it tells us is this is where the volume starts and it resets at RTH open. So it's 0. And this is the developing volume point of control for the, developing profile for the full day. This is all you got. And this is showing us all the volume that's visible on the chart volume profile. So let's see what it does. So too high, this is resistance. Now I'm going to take you somewhere where most don't go. I call this a variable high volume node. And what I'm doing is I'm tracking volume because in a store, wherever the volume is the price, the fair price. But if I leave and there's more volume here, and now this price shifts down, the yellow line, which is where the highest volume is at the moment, it's right there, then this might be too high. Why'd we leave it? I'm not paying that. So now I have this. Too low. Okay. Follow the process. Now, don't forget, I'm looking to get short. Am I going to get short here? Well, I got resistance there, But now I have support here. And the key, too high, too low. There's the support. You see it? Shift up, VPOC migration. In the minutia, now we're only in here, how long? 20 seconds. And I already know that this might be too low. But I also know that might be too high. So too low, too high. Microstructure. Nothing to do yet. Teeth are chattering. I'm the same as you. What is it going to do? I don't know. What might it do? Either one. If I got resistance, I got support. So now I got it bracketed. It's going to do something. Watch. What's too high? Right there. Right there. So I come up. There's too high. This is a microstructure. If it's a trigger, then I can come down here. If I hold this and bump off it and get above here, then that suggests to me squeeze. Let's see what it does. See? So, too low, too high. Resistance, support, support. If you're going south of the border, you're breaking under here. If you're going north into the squeeze area, you're coming above here. Now what? So that's a long. It is a long, but it's counter trend. Okay? So let's agree it might be a long. Except if you're not a counter trend trader, you would what I do is I look at this and I go, okay, I see a long. Great. What do I want to do? Given Friday, I want to get short. Somebody else can be a buyer. That's a short squeeze, maybe. So where's my next price? Let's look at this in fractal. If that is too low, and that is too low, where was the last place it was too high? Well, in the developing time frame, it was too high here. But what's the old saying? Resistance becomes support. Now, if I break high, this is support. Well, where's resistance? It's there because I left it too high, too low. Watch. So now, okay, what's my next trade? It's here. If I took the long, and this is a Trader Lab structured trade, not qualified, remember, this is my target. If this was a regular take a walk in the park trading day, this would be a long to here and then up to the overnight high. But it's not. So what it is it's a long not taken to here. And this is the first level first short. So let's look at it. And this is Trader Lab traded. You can learn this. Not saying you need to or you want to. But this might differentiate what you're doing from what most other traders do. Why do we come here? Because it was too high. Now, let's look at the trigger. And you can learn these. There's a whole library of webinars in Trader Lab. You can learn this process. This is auction market theory using a volume profile. Volume profile is the truth of the market. And we're doing this in real time. We're using order flow. So I got some liquidity here. That's lovely. Location, location, location. Remember? Real estate. Location. 80%-ish probability. What do I have here? Now, right here, no clue. Buyers are here. Sellers, 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 buyer. Buyers are still doing a good job at my location. Doesn't get any better than this, at least in Trader Lab. Maybe it gets better, but this is pretty good. So right here, it's going up. Sellers get below the buyer, the aggressor, and that's delta. You can learn about delta, and of course, and how to use it. Delta's order flow phenomena, and what you're seeing in delta is the aggressor. What you're not seeing is the passive side. That's what this is. The limit order book. They are passive sellers. It's like, fine. Oh, I'll sell it to you if you give me $4. Oh, you're only going to offer me $3? Oh, I'm not taking it. Forget it. Only $4 or I'm not selling. Well, these guys are passive. They're selling this. And from an auction point of view, this is too high. Maybe. So right here, buyers. What happens when the sellers are below the buyers? They took control. This guy was absorbed. Thanks for playing. We'll send you the coupon to the buffet. Now, break low. Now, what's important about this is location. This is what you learn in Trader Lab. Structured trades are location based, you know? And if you don't have a trade here, there's loads of other trades that are going to show up. It's just this is one of them. So the sellers, this is a trigger. So I'm going to draw a little line here. I want you to see structure. And I think this is kind of useful for you guys so you can see this. Now, you'll notice what I'm doing is I'm bracketing this is a consolidation. This is an auction. I always think of these like stores. So this is like your store down the street. It's a very simple concept. Why make trading complicated? It's already difficult because it's random. Why add more into it? Let's look at it something we understand. If a price is too high, the sellers are going to sell it up at a too high price. And if we run out of buyers because the sellers absorbed this buying, we can maybe get a trigger and go lower. The high volume is right there. And I'm not going to do this too long today. I'm just going to show you some basic structure. And we break away. Now, this is a Trader Lab trigger. So this is the high volume. This is the retail price in this fractal. And if it's too high, we leave it. We can return here. What did we do when we got long? We returned there, which is, that. Same. Does this look familiar? Too high. What about this one? Well, it was too low. Well, if that's too high, what might happen? Maybe we'll come back and check what was too low. I don't know. What do you think? This is a short in the Trader Lab. Stop goes 3 ticks above the high. You put your helmet on. Then your job is to get risk neutral, and this is called mean reversion, but it's a little more, let's put it this way. There's components that align here. If that's too high, and I'm at an outside edge, and I'm at a location that was too high, and I get a trigger, then I might come back here. What did I do here? This was too high. I check back here. Fractal. What's this? This is too high. What's the possibility? Check back here. This is the same as this. They're the same. Does that make sense? Probably a little different concept, huh? Is there something going on with the screen or something? Is there something going on with the stream, guys? No? Okay. If somebody, Dan, can you confirm that? One moment, guys. I'm going to try to fix something. Okay. Okay, I think it should be good now, Dan. Are we all right, Discord? Okay, great. All right. Sorry about that. You need a little hand to come out and slap you and get your attention. So, conceptually, and this is so important if you want to understand how the market works, conceptually, it is constant, it happens everywhere, and it is fractal. When I showed you here, too high, too low, reject, this, too low at the time, where's the last place it was too high? It was there. If this becomes, it's still too high, where might I come? Back here. What happened over here? This was too high right there. Where did I come back? Right there. This and that are the same as that and that. Is everybody following this conceptually? Are you guys tracking? By the way, if you're in YouTube, please give a like. It's always good to be liked. So this is our first short. And remember where we're trying to go. It's either, now subject to your trade plan, you would either be getting risk neutral here because you might get buyers, mid and VWAPers, even though the context is forget about it, but that's besides the point. So you would get risk neutral, then you're coming here and down. Or subject to your understanding of market mechanics, you get short here and you scale here, and then you put your helmet on, and then it's trade management. Let's look. VPOC migration, maybe too high. Let's watch the behavior. Remember, too high? Now what about this? See if you don't see something consistent. What's this? Oh, really? Too high. So I don't use indicators. What I found was I am the indicator. In other words, I'm processing what the market is saying. In other words, I'm translating, as opposed to something that tells me, yeah, it's going down now. Well, would it get me short here? I don't think so. Or there, or here. Would it stop here? Maybe, I don't know. It never did for me. So what about this? Do I know what this is? And I know this is what was too low. And if this shifts up, and instead of going that way, I come this way, what's the language say? Maybe too high. And where do we test? I'm going to throw a little line on here just so you could kind of see something. Right there is resistance. Too high. So if that's too high and I shift down, this is now the new retail price. So if I think the trend might be down, then subject to my plan, I can sell this, or I'm just hanging out from up here. Watch. Where's support? What was maybe too low? Wasn't it there? We go through it. And of course, the trend is down, right? So let's follow the yellow brick road. So this is the first trade in TraderLab. Or there are other trades here subject to your plan. The smart trade, if you will, the one that had the better edge, was the high of the day. And not because we can't sell the high of the day, but that location. It wasn't because we knew anything. It's because we know that that level was rejected and we're coming back to visit it. That's what shopping is. If this price is too high, we came back right there. We're going to reject it. If this is too high and I get below it, this is my support. If I get below this and this, it's hasta la vista. And let's look at what we come back and test. Just follow with me. You're going to be amazed. This is why I do what I do, and this is how I trade. You know this old saying, support, break, support becomes resistance. That's another short, if it's in your plan. Now there's more. Let's start going in fractals. Let's watch the behavior of the market. Short, against here, short. You can see all these. Now, you learn this in TraderLab. I'm using this volume. You see this yellow line? And I'm using what's called high volume nodes, which are those. So this is too high. This is a trigger, too high. Come back and test. Hasta la vista. VPOC migration, too high. I can sell this. I can sell this. I can sell this. I can sell that. All these are in TraderLab. There's more. Break low. Too high. What's this? Maybe too high. Remember, everybody takes stops, so we got to get over that. Doesn't mean you got to like it, but it does mean you need to accept it. Let's keep going. Now, this is yesterday's volume point of control. This is the retail price from yesterday. Look if you see something consistent. Retail price, developing retail price, yesterday's retail price. What does the market do? It went up to the ETH, overnight volume point of control, which was the first short. That was too high. Well, if we're in the shopping experience, then we're looking for this. And because we're in a downtrend, take out yesterday's low. That was an unfinished auction from Friday. I mean, that thing just stopped above the outside edge of a distribution. There are stops underneath. So anyway, short. And what do you see here? Anything familiar? Do you notice what I'm doing? This is not complicated. Here's what it is. Random. So, and I always like to mention this. I started trading in 1980. Not that part. But the part is that I didn't understand randomness, and I was into this thing of making it certain and getting confirmation. Does that sound familiar? And I did that with technical indicators and eventually trading systems. Now, let's watch. This is the new retail price. Now, I can come up and continue or squeeze. Let's watch. Let me open this up. It's getting noisy for you. I know that. I think I'm going to turn some of this stuff off just to clean it up a little bit for you guys today. I can, wrong one. Whoa, whoops. Sorry. Let me just get some of this off of here. Sweep stops. Oh, I know what it is. Sorry, guys. I want to get some of the noise out of here, so please bear with a second. Okay. Okay. Forgot what I was going to show you at this point. Oh, yeah, we were over here, I think. Yeah, I still got something on here. But this is sweeps. But so this is too high. This is the retail price. When you come back here, right here, there's two possibilities. You're going to bounce off it, keep going, or mean reversion. This is a change in behavior. What it is, and you don't know at the time, so part of the joy. What I do is if the trend is down, what I look at is this. What this is telling me, if I look at what it says, remember language, that's too high and that's too low, and that's the retail price here. If I break out of this, because that's where the volume is, I then do the same process at a lower level. And as we move along here, it's this rotational thing going on. That's the high volume. And as I sequentially move down, it's going to rotate because the market's always rotating. And if that's too high, which is right there, I'm going to move down. And then if I'm down here, same thing, until it comes across the other way. So if I'm sequentially moving down, then it's just going to, we're going to keep going. And I'm looking for this. What happens right here? Let's look at it. By the way, there's over a 90% probability we take out either the first hour's high or low. That's the first hour's low. We'll find out, right? So this is a sweep. And there's my buyer. Micro high volume structure is right there. So this is like a little VPOC. It's one of those. It's here because this is what chop, 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 chop is. And the thing about the auction is the sellers are here and the buyers are here. Now, I don't know the buyers are here until the buyers are above the seller and I see this aggression. So that in my mind, that's shorts covering. Okay. That's how I see it. I don't know about getting long. I'm not thinking about that. If you're managing your trade, you'd just be following this thing down. And when you get this, so you already know where your exit is. Your exit's at a trailing stop that you have vetted. It's not about how low is it going to go. Nobody knows. It's like the limbo. How low can you go? Ever do the limbo? Very popular in the old days. So is the cha-cha. Bet you guys haven't heard of that. So VWAP. So this out here, if this is too high, we're going to rotate down. Let's see what it does. And what's too low? Right there. You see it? Is everybody tracking? How we doing in YouTube? You guys doing okay? I see we have a short setting up here at 37. Better get going. So, variable high volume node, resistance. So if I come up to that level, now the thing about the auction is it doesn't, everything in trading is always random. So there's no holy grail. There's no secret sauce. What I know is sellers were here. Liquidity came into the book there. These buyers got absorbed by the sellers that are there. Sellers are in control. If I come back here, I need to be looking at it. If I do. And let's look at this. So when I cross over that, now forget, if this is too high, where's the support? It's there. There it is. Now, I know now I got support here, and I know I have resistance here. And there's more. And I know I got stops sitting here and at the VWAP and at the mid. Very important. When you're putting your trade plan together, you got to be write down. If you haven't thought of this, look left. Where's the stops? Here. And we know about the VWAP and the mid. So if you were to take a trade anywhere, you're stepping in front of retail trader behavior. So I don't have a qualified trade, except I'd be looking at this level. And I don't have anything here. Not a Zippo. No trigger. So now, basically, I want to see how far up we can come. So I'm squeezing outside, okay? So, and the way this tends to work is, the idea is to do something called mean reversion. And mean reversion, this is outside in trading. So if we think the trend is down, we want to try to find an outside edge. So where's our potential outside edges? Well, many traders keep their stops inside yesterday's range. The other side of that is we can anticipate the market coming back to test yesterday's range. And if the volume point of control, the high volume or the fair price is below us, then we're talking a context or a trade plan called mean reversion, which is outside in trading only. If you think the trend is down, I'm going to walk out on a limb here, or step out at least, and say it's shorts. Trend is down. So if I'm not a counter trend trader, and most developing traders, that's not a place to go until you're already successful, consistent, have your emotions under control, trading with the dominant side. You're not here to play a video game. You're here to sustain a business. You can learn to do that, I believe. And if you are going to make this into a video game, you will run out of time in dollars, most likely, before you ever can get to the skill set. So to develop the skills, and you come to Trader Lab, it is about building a business. And then whatever happens, and you got to do the work to become proficient. So we're looking at yesterday's range and an outside edge. Now let's look at these distributions. I'm going to just touch on something a little different for you guys. Do you notice where the main volume is? It's over here. And this is the outside edge. When you push through it, it's over here. As we're going up, the volume is getting less at these levels. So we're spending less time. As we come out here, this is the lowest area right here. So, and it's yesterday's low. This is my area to be stalking a short right here. Because now I've got higher volume than here. So there's more resistance here. And then I have another notch. And then, up. Now it can go anywhere in the sense of how high it might go, because that's not our job. So we can't do anything with that. But let's look. So the market's going up, and don't know. I have a variable high volume node here. I got one there. I'm above it, but I'm looking for the squeeze. We got the squeeze. I'm in the squeezeteria. Let's see what we get. I'm looking for a trigger. Right here, I have high volume. I'm going to put a little line on it. Let's see where we are. So here, sellers are here. Trigger. Liquidity comes in the book. Trigger. I'm getting sweeps, which suggest the potential for a counter rotation. So I've got everything lining up, except clueless. And I shall remain indefinitely clueless because I can't predict anything. VPOC migration. So right here, I'm either going to push off or I'm going to return here. Let's take a look. Oh, I guess we are going to take a look. There you are. It's not a trade recommendation. I had no idea. So this is our variable high volume node. So this is a potential short in the Trader Lab, and it's not a recommendation. Everybody gets run over. Part of the fun of randomness. So this is what's going to happen here. First of all, I've got the liquidity. This is supportive. I've got a triggering structure, and this trade will fail. Well, if we get above here. But what I typically do, just as a matter of interest, is put my stop 3 ticks over the high of this trigger. And it is a trigger, and whatever happens, happens. And I don't want you to think that somehow that there's anybody out here who doesn't take stops. So your stop would be 3 ticks above here. And we could still squeeze. There's nothing saying we won't. So it's just a trade. So what this needs to do is break away from here and come here. If we come out the top, then that's that. That's the end of the trade. There's nothing to do until we see how it's gonna work. Questions, guys? Let me just make sure I got everything lined up over here. Okay, you guys have questions? How are we doing in YouTube? How about a thumb up if you're visiting? Appreciate it. Helps the stream. Oh, Chronos Master. Okay, well, I'll wait for your question. So this is a potential short right here. It's a key element. Remember what we're doing. We're shopping. So what we're trying to determine is this price fair? If we push this way, then we're going to squeeze more. That's it. There's nothing more to it than that. The first hour's high is right here. It's called the IB high because that's where the short was. this morning. So I'm just going to throw that in here so we know where it is. There's over a 90% probability we take out either the first hour's high or low, and we might take both out. Who knows? Doesn't matter. So it's either if we push off here, then we have the potential to squeeze these guys out. If we don't, if we can hold this outside edge and this liquidity, then we can come back here. And that's all we know. So that's as deep as this gets. Does that make sense? By the way, if you guys have questions, always post them in the Trader Lab. I mean, if you have something specific, regarding to this process or Trader Lab, you can DM me and I'll do my best to get back. This trade looks like it's going to fail. We'll see. 3 ticks above here would put us wherever. Yeah, this is going to get stopped, I think. Got to see what happens here. This had all the pieces for a short. So it's a decision. It's a place where either we're going to reject this and our sellers that are here are going to continue selling. That's why I give it 3 ticks. And we have to see if we just keep pushing or if we come back. If we keep pushing, then there's a possibility we'll take out the high of the day and squeeze the shorts out. Remember, the market tends to have certain behavior. It tends to go down to go up and go up to go down. And that's the rotational nature of the market. The market is very short. It can still squeeze. If we run out of the squeeze or the buy stops, then we can continue with the trend. So we'll see what it does. This does look like it's going to keep going, but I don't know. I don't know what's going to happen when I put a trade on. So I just put the trades on and let it go at that. But if you're taking this trade here, this is where your risk will be. From there to 3 ticks above there. So it's around 3 points. So I pretty much run a 3-point risk. And if I can enter a little better, it's a little bit less, 2.5 to 3. That's generally it by following a process like this. And I think that's palatable, And in Trader Lab, it's a 2-lot minimum configuration. So the first job of the first contract is to get risk neutral, cover your stop on your runner, and then you manage your runner based on your trade plan. So we only got a couple of ticks to go here. It looks like it's going to take you out. So we'll see. So this is resistance right up here. It's an aggressive trade because of this. So if this now is the retail price and this is too low and we continue, then that's the squeeze is on. If we only come out here, then we can come here. So that's the trade, there to there, or the trade fails and then there's nothing. You have a stop. That's it. There is nothing more. And that looks like that's what's going on here. Let's see. 37, call it 38. I think it's took its stop here. I can't see. Let me just try to see. Yeah. So this trade failed. Okay. That's a stop. So now I have nothing going on for a structured trade at the moment. Let's look left. You always got to be looking left. Let's see where the fuel is. So this it tapers as we go up. So I don't have anything at the moment. What I'm doing now is I'm going to be watching these outside edges. But we remember where this notch was? And this is where it really, we wanted it to stay under here. That's kind of the outside. So getting short up in this area was kind of this is sort of the last resistance. So we took it out. So there's just nothing now. So I don't have anything. I'm just sitting here now. As a trader, I just say, okay, maybe the condition has changed and I'm not in alignment. Stops are sitting over the high of the day. My next trade, if it comes out here and all I do is squeeze, if I come back in, then I'll be thinking about a mean reversion short, and it's not a recommendation to come back here. So my next trade is going to be a short based on what might happen here. So it depends. I mean, if this thing just goes ripping, I'm not going to have a short. I'm going to have a trigger. So let's see what it does. So all this looks very enticing, right? But the market rotates. So the fact it pulls down doesn't mean I should be just going short all the way up. I need to be waiting for locations. So I don't have a location for a short, no matter what happens here, because this can mean revert right back here. But for me to trade, I really need a place to work with. I don't have anything here at the moment. Sweep. So we're going to watch this behavior here just to see the microstructure. It's right there. Now what happens against this? Let's watch it. So this is where the sellers came in and the buyers are here. We're below the buyers. So when you come back to this microstructure, which is right there, that's your resistance. So we can track this. Now, these are actually triggers, but it doesn't mean you get short. It's just a narrative of potential to come back here. But if it's not at a location, it's in the middle of nowhere. It's kind of like the bus, only picture up at the bus stop. They're not going to stop in the middle. And you don't want to trade in the middle of nothing. Even though this is a selling structure, it's nowhere. And it may come back here, or it may only pause to there and then continue higher. Now, while it always can do anything, there's no location here. Now, there are traders in Trader Lab who are going to trade back to here or try to trade back to there. And they're a little more proficient. But when you're developing, it's about developing the discipline. Once you understand what you're seeing and reading, because this is a language, you could be short here, back to here. But it's not a structured trade. So I focus on what's called structured trades here in the stream. And the idea of a structured trade is that you vet it, you see if you have a statistical edge, and you wait for it. And if you have to wait an hour or whatever, you wait, because it's about edge. It's not about action. You're not here to keep busy. You got to remember, you're here to take advantage of opportunity that presents itself. A rotation in the middle of nowhere is not necessarily opportunity, because you're still going to take risk. And while we might come here, there's nothing up here to lean on. There's really not much going on here that I would lean on. Doesn't matter that I have a sell trigger, because a sell triggers, all it is suggesting a rotation. It has to be aligned with something, and then we have targeting. But this is the target. So if I get a short, I'm coming here. no matter where. So let's see how it does. And these are not recommendations. I do not use, I'm getting a question about TTW. No, I don't use TTW. And as far as if you have a problem reading the dome, go to bookmap.com. There's all kinds of videos on reading the Bookmap dome, if that's what you're referring to. Tons of education available. Double bottom structure. What's 39? I'm not sure what you're asking me about the 39. This isn't a short FIRS, if that's what you're asking about. This is just material behavior. This is just rotations. This is not tradable for me. I don't trade this because it's not worth it. It's not worth it in the sense there's not a good, it's not a location. It's a behavior. If the trade came here, it wouldn't shock me because it would be mean reversion. But we're not outside. We're just in the middle of this distribution. If I was going to be looking for shorts, it's got to be outside. And I do have that IB, so I got to be very careful now about the possibility of getting squeezed. This is the current high of the day. That was our short this morning, you know. Questions, guys? Cumulative delta. Ambience, I'm getting a question from Ambience over there in YouTube. How do I interpret cumulative delta? Well, there's session volume, session delta, which is this one, showing that the market is currently short. And then in the current chart delta, which is this, it's showing us the buyers, the aggressors. And how do I interpret it? I don't interpret it. I interpret it here, delta. This doesn't do anything for me because it's just giving me everything. When I'm going to be shorting, I'm going to have positive delta because the market's going up and I'm going to be fading it. So where I interpret delta is here because this is where I'm going to trade. And what it tells me here is that I had buyers, but the sellers are here. The delta's positive here. But what happens over here? I'm below the buyers. This is still green because it's only taking what's on the screen and putting all of it together. Well, that doesn't help me trade. This is a short, right? But it's not. But I'm just saying, is this a short structure? That's really what I meant to say. And that's a target. If it was a vetted structured trade, it's not mine. Could be somebody else's, but it's not mine. So the delta matters here and there. Here's my buyers. Sellers are below the buyers. That's my buy delta. Buy delta. Sellers in control. Buyers try here. Sellers in control. Buyers try here. What happened up here? Sellers took control. Resistance. And then down to that VPOC or not. Again, not a trade. It's just structure. Once you put the time in to understand how the market works, you gradually develop. This is not, plug and play. Guys, it doesn't exist in this business. Wouldn't it be nice? We'd all like that. Doesn't exist. So what do we have here? If this is too high, then we're coming here. That's what I know. If it's not too high, we just rotate here, and then we're going to turn around and squeeze. That's what I know. That's all I need to know. And then trade management, wear a helmet, And promise you'll never do it again if you take a stop. That's all. That's humor. So what is this condition? Well, if we come back here, which nobody knows, okay? But this is a structure. It's called mean reversion. What is hard about mean reversion, and is a specific trade plan inside a trade plan, is that where's the outside edge? And you can spend half your life taking shorts and taking stops trying to pick the outside. That's what's so hard about mean reversion, However, if you believe the trend is down, you're not taking longs unless you're a counter trend trader, and then it's all fine because now you have a defined edge. For me, I kind of like to go with what I consider the advancing army and not participate in the counterattacks or the squeezes. It doesn't mean I don't. I'm just saying, as for developing traders, you really want to kind of get aligned with the dominant, the strong side. And right now, the sellers are the strong side. So if this is going to come back, it's going here. And then we can rotate to the other side, or boom, bang, right? Boom, bang. Too high, back here. That's mean reversion. So in the Trader Lab, you would know not what's going to happen, but where it might happen and what's the condition of the market that would suggest we might come back here. That you can learn. Whether it's going to do it from here or out here, that, my friends, is as they say, the $64,000 question, because it's random, you don't know. So once you understand how the market works, you'd be looking for this at a vetted location. And out here, and this isn't there. This might be workable there. Not out here, but out in here. But it just, for me, that's our target. And then you got the mid. So if we get under here, the next place we might anticipate a reaction would be the mid to come back here and then potentially to squeeze. So we might get mid buyers and there's stops under here. So you need to be conscious of that also. You guys have questions? And please give a like if you're visiting on YouTube. Alan has given me a question. Do I consider LVNs? Yeah, I do. However, LVNs are weak areas. They're outside edge structures. There's stops at these edges. So out here, when we fell out of here and ran away, this outside edge up here is where there's stops. So, the problem is, of course, where is the outside edge? This is a low volume area because we ripped. It's not auctioned. The potential for the market is to come back and fill it. And we'd look for stops up in here. The other part of this is if we find too high, which, who knows, then here. So we can do this to this, or we can just rotate and then catch these guys and squeeze higher. Every day, every moment, it's always one or the other, and nobody knows which one. So when you put risk on, you've got to take what's called intelligent risk and hopefully do it at a location that makes sense, which here's something I just noticed interesting. That's a VHVN right there. So the little micro movement of that yellow line, all of it means something. So what we're doing is we're just looking at the shoppers, really. So this was too high right there. So let me just put a little line on that one. And let's see what it does. Let's just come back to, because it's all about levels and locations. See, so when you get the sweep and you come up there, now I didn't mark that one because I just didn't see it. That's why when I trade, by the way, I'm not, I'm very much in a zone, and all this is all important to me. I didn't notice that. I get the sweep, I come to a location, and so I have the sweep, I have the trigger, it's all there, and then this is where you're trying to go. That's mean reversion. And here's what it says. It's the same thing I showed you at the top of the stream. If this is too high, it's a shopping experience. Remember, that was too high, which is why I was looking for a short. If this is too high, it's the next level. This is the current price. The nature of the market is to return here. That's the nature. I don't know if it will. So I got a sweep. I have a trigger. I have a short. And then I'm going here. And then, hopefully, assuming you don't take a stop, which everybody does, then we're looking for the mid, the VWAP, and back here. That's how this might work. Does that make sense? You say a lot of volume came in at 45? Well, if you're talking about this, yeah, there was buyers there. They got absorbed. We had a sweep and they got absorbed. So that's what I would make of that. And that's what created this. Now, this is the target. If we don't get there, we're going to squeeze these sellers. That's all it is. That's all trading is. It's either one or the other. And there's nobody has this, it's going to do X or Y. It's what it might do. So we have to watch. But this is the target down here. But I'm seeing some good buying again now. So I good selling here. Stops are here. And remember, the problem with this trade is it's not at a location. It's sort of, it's like, it's just not especially good. But this is, if I took this trade, I'd be going for this. But it's not a structured trade in TraderLab. It has pieces. It's mean reversion, so it has pieces, but it's not at a location. That's the point I want to make. You're kind of just grabbing this, but it has a lot of pieces. It's got the sweep, it's got a level, it's got a trigger, it's got a test, and it's a short. If it's in your plan, come here. We're going to still get to see what it does. Alan, I'm not sure what you're asking me about LVNs. LVNs on the RTH session in higher time frames are more important to watch than LVNs and say the chart volume profile. They're all the same. What Alan is asking is, we have an LVN here. Which of these is more important? Like these little structures or this? It's both. So this is more relevant because this is for the whole day, developing day time frame. And I know if I come out here that there's going to be stops up in here. So this I cannot overlook. When I get into this, I'm only looking at this for like triggers and more. Because what you're seeing here is inside of this. So when you see this little thing right here, well, if you look to the right, there's nothing there on the session volume profile, but I can see it in here because there was that little thing right there. That's an auction, but it is inside of this. So I look at both of them because when I see this behavior, that's a buy trigger, and it's saying the buyers were here and they absorbed. So, and this trade, look, this is not a structured trade. Remember that. So I use them both. So when I come up outside, And let's say I'm in a low volume zone in here. I'm then going to look over here and at this one to try to see what's happening right here. Because that's all I'm looking at, which is this right here. So I'm looking at the outside edge in this one, which is up here at the moment. And I'm looking at this. So I can use this structure, this volume, as potential resistance. And it shows up right there. And it's also in alignment with this one, you know. But if I come above this, then I'm coming here. So we'll just watch it, okay? So I hope that answers your question on how I use those. Yeah, they're inside of each other, exactly. But I do think in mean reversion, Alan, that is what you need outside in trading. You want to come out. You want to come to an outside edge, and there's going to be stops up here. Everybody, when you're going to put a trade on, you have to look and see if you're stepping in front of like a double top. And intraday, you get the same stuff. If you have double tops intraday, they're weak because retail traders are going to pull their stops there. So the market has a tendency to take those stops out. So before you put any trade on, you always got to look and see where's the swings. We got one right there, and I don't want to open it up more, but so we're still coming out, you know. So there's really still nothing to do. We are not getting back to the mean, so that is suggesting that maybe it's suggesting we got to go higher and try to find too high. And remember, the stops are over the high of the day. So your choices are no trade until we do some more squeezing, or you are going to scalp trying to come back for mean reversion. And by scalping, I mean, if you took this trade, you're trying to come here, but you're also trying to get risk neutral. You know, you would be risk neutral. And then you'd hold a runner to come down to the other side. That's how I would trade this, but it's still not a structured trade. It's just a behavioral trade. It's an auction-based trade. It's not a structured trade. A structured trade uses the components of the auction, but they're at specific locations. And that is a big part of it. How are we doing in YouTube? How about a thumb up? Give a like. Yeah, it's fractals, Alan. They trade inside each other. Alan in the Trader Lab was mentioning that, you know, when we're trading against this structure, outside edges, we're going to be looking at this, which is only isolating this for triggers and rejection. So if I have a little auction going on right here, and you can see the high volume is there, that's resistance at the moment. Because I'm at a location. Now there's no trade here. We're just what do they say? Cruising. Buyers are here, sellers are there. High volume is here. Sellers are below this. This is a trigger. Let's just see what it does. And it's not necessarily a location. This came into the book. Here, have 1,000. But these are not trades that I could take. They're just behaviors I observe. This is support. That's resistance. You can kind of see these structures and you can ask yourself, well, what's happening here? If this is too low and the buyers are here and I see the buying behavior, then I get my sellers here. If I come down, this is support. Well, resistance is here, support is here. And so far, we are holding support. So if you're on the long side, you could use these for trade management. If you're looking to take shorts, you'll be looking for the opposite behavior to come back and come down here. So the trade still for me is going to be looking for shorts, and I might not get a short until I take out the high, the first hour, this. So I'm still have nothing to do. So if I was long, I'd be managing my long, but I'm not. I wouldn't be long. I'd just be waiting for shorts. But we've got to see the squeeze. The other thing about it is other traders are going to be on the long side. And for me, if I don't get a short, I just, the morning's already been, if I'm trading the morning, I've got my day made already. I don't need to be getting long. Unless there's a compelling reason. At the moment, I don't have a compelling reason. I have shorts getting squeezed. It's different. Questions? How to get mentally in the zone? Well, trade plan, and I do a couple of things here. Well, first of all, I have a mental preparation as part of my trade plan. Besides everything else, all the technical stuff. See, this is more towards an outside edge, tapering. But I still, doesn't matter to me. So I would, I'm still thinking we're coming here, but I have no trade. So I just have nothing to do. I just don't trade this. So I have my regular trade plan. What's the context? What's going on? What happened Friday? What about the ETH? Where are my first trades based on, the current condition of the market? What am I going to be looking for? Well, I'm going to be looking for the top of the stream, down and then squeeze up, or gap, run away, or open, squeeze up first, and then get short. So everything was short only for me today. It was just how, under which configuration. So the plan was already laid out. Then it either aligns with the plan, or if it doesn't, what does it mean? So, but that's a different conversation, the trade plan and how to stay in alignment. The mental preparation is, I have a mental prep in the sense of what are my weaknesses? What do I need to remind myself of how I'm going to feel? What's going to be generated? What responses I want to negate? I need to know what's going to happen because it happens to all of us, hesitancy, looking for certainty, bailing out, whatever it is, we all do, right? We all do that. So the thing about it is that recognizing what stimulates the response. The mechanism is the fight and flight and all that. And the reptilian brain is really driving the bus, whether you know it or not. So we can't stop the impulses because it's hormonal. There's chemicals released in your brain. You're basically under the influence. You wouldn't drive your car, hopefully, under the influence. Yet we're trading under the influence of chemicals in our brains and emotions, which generate the chemical. All this stuff. We got this whole system working against us in this environment. So my mental preparation is acknowledging this wiring and my responses and what it has cost me in the past. What have I learned from it? Why is it not in my interest to keep doing it? And if you can quantify errors, and put a dollar amount to it. I always talk about something I created with another trader many years ago, many years ago, called the error cost calculator. Most of us, we make an error, we go on to the next trade, and it's gone. And then at the end of the day, if you happen to be profitable, or you made some of your losses better, or whatever, you're going to say, well, I'll do better tomorrow, and it wasn't so bad. Could have been worse. No, it could be a lot worse. Or how about working on minimizing those events? I did it by the error cost calculator. So I would put in a spreadsheet errors, and an error would be FOMO, taking a trade, even if I got paid on it, subtract the amount I made because it was an error, trades I didn't take because I, quote, wasn't certain. Welcome to trading. You're never going to be certain. All the things, bailing out, moving the stop, squeezing the trade out because I don't want to give it back when it's not my plan, or I don't have a plan. I added it up and I started keeping track weekly and monthly. And if you're in Trader Lab, you already know this. But when you start throwing $2,000, $4,000, $5,000 a week, $20,000 a month out, giving it away. Never mind, giving it away. We all take stops. I'm not talking about those. I'm talking about all the other stuff. You could be a profitable trader just by minimizing when you lose control. And we all lose control. So, you know what I'm saying? So, we're always going to make errors, but can you minimize them? So my mental prep is to remind myself of my vulnerabilities, my humanity, and that it doesn't serve me in this business. I need to remind myself I'm in a gaming business. I need to remind myself that it's 100% uncertain 100% of the time. It's the same thing as a casino operator. They control how they play the game, and they only play games that have an edge, but they don't have any more control than that. You know, they don't control how the cards come out of the deck, what cards, and how gamblers play cards. They're in a random environment too. So the only thing they control is how they play the game. We're in the same business. We only control the trades we take. And if we have a business plan, so we know which trades give us a statistical edge, now we're sitting on the same side as the casino does. They only play games that have an edge that favors them, even though they pay the gamblers and we pay the other traders on the other side of our trade. Even though over time, if we have an edge and we execute, we'll extract dollars from them. That's our business. So in between, we got our emotional stimulus going on. So I remind myself the business I'm in. I remind myself of my humanity and the deficiencies that I have to deal with in this environment that will be triggered. I remind myself that I've been doing this 45 years and I think I know what I'm doing well enough to continue doing it every day. And everybody takes stops. Everybody has losing days or hits their loss limits. That's reality. I'm not attached to being right. I'm not attached to not having not having losses. I can't be because it doesn't exist in this business. Every business has overhead and cost of production. Why would this be any different? So I have to mentally put myself and recenter myself. I made a tape that I listen to in the morning. And it just sort of summarizes these things. And I'm like talking to myself. It's like a coach. I'm coaching myself in the morning. I'm bringing myself into the reminder. Here's the competition. Here's what you're going to feel. Here's the things we got to watch out for. Here's what you've learned from your past experience because you've paid with throwing dollars out the window by not having a good plan or any plan. By reacting to FOMO, by moving your stop, by skipping trades. You've done all that and it's cost you a ton. Are you going to keep doing it? No. Are you going to learn from it? Yes. That's my mental preparation and more. And then reviewing my trade plan, my statistics. It's like a pilot ready for takeoff. You know, you got to get everything lined up, do your checklist, sit down, and then mind meld with the market and start narrating it. What does it say? If you understand the auction, even though whatever happens and it's random, you can basically narrate it, and it's a language. Now the problem with everything in trading is the randomness. Why didn't the market go here? Well, it's random. And we took these guys out. Is the trend up or down right now? It's a great question, I think, because I can say that, well, we're having a counter rotation, but I'm still looking for shorts. That's me. Other traders are saying is, hey, it's going to take the high of the day out. We're going to squeeze everybody out. Maybe. There's no right or wrong in this. I'm still looking for this. So how do you reconcile that? How about you can't? The only way you reconcile it is, what's your trade plan? What makes sense to you? And the fact that it's random, and in mean reversion, there's kind of a joke in Trader Lab. Mean, this is the mean or the median, and this is a reversion trading. It's a specific plan. The problem, of course, everything has a problem, is you would take this trade and you'd take a stop, or you'd get risk neutral and scratch the trade. You get this, it sets up another short right here. You'd put the same trade on again and try to get risk neutral and try to come back here and underneath. That's the nature. And where's support? Let's look right there. See a little high volume? Where did it come from? This. So I know if I take a short, that's where I got to go. Because right here, you see the buyers took control. This is an auction right here. Chop, chop, chop. Going to zero. Uh-oh, buyers take control. So if you're in this short, right, and you don't know this until hindsight, don't you wish? And then if you take this out, the trade's over. But I get another sweep. Notice what happens with the sweep. Sweep, counter rotation. Squeeze, support, sweep, counter rotation. Where's support? There. Why? Too low buyers. So if I get short, I got to scale here. And then it's either going to take me out and I scratch again, or I'm going to hold this on a retracement and then take these guys out and come here. That's what I know. After that, it's whatever. Hope that makes some sense. Are you guys getting something from this? How about a like? Strategy for trading with Bookmap. Well, come to the Trader Lab. That's what we do all day. Bookmap order flow tool. What it allows us to do is basically get down into the microstructure for potentially timely execution and risk management. If I can open this up, I can read it. And basically what it's telling me is, this is too high. There's my sellers. There's resistance. There's my sellers. There's resistance because we're still below the buyers who got thrown under the bus. Sellers. Here's resistance. Sellers. Where are we trying to go? There. That's all I know. How can I do that? Order flow. And this. Because what this is telling me is where the potential is for behavior, not what will happen, because I am trying to go here. And the thing with mean reversion is, and that's why we call it mean, and it is where's the outside edge? This is a legitimate short, if it's in your plan, to go there. Oh, no, sorry, Charlie. This is a little bit legitimate short to go there, but support, scale. So if you took a short here, you got to scale there, which is okay. There's enough meat on the bone, don't you think? It's like, what, 6 points or 7 points? This now is resistance, and that's resistance. Why? Green delta. If I have aggressors and it breaks, that means the passive side, the invisible participants, and there might have been icebergs, but I turned it off for you guys, break, trigger resistance, because the sellers are here. Sellers are there. Sellers are here. If I come back, and these sellers see this, if they're still going to sell it, they're going to sell it, and down we go. Buyers come back after we test support. Where do we come? Where the sellers took over. This is order flow. So I know by looking at this that my sellers are in control. They're in control there. These guys are on a stretcher someplace. They were tested. Sellers who sold here, under, back here, too high. Sellers are here. I come back here. Sellers are going, hey, you want some more? Enjoy yourself. And now this is the target. Anyway, I hope you got something out of this today, guys. Remember, these streams are available to everybody in the Bookmap Discord Trader Lab community. 1 second, sorry. And there's also a library of webinars and the Trader Lab community itself. There's a link in the bottom of YouTube. There's no cost to become a participant in the Trader Lab. And it's open to everybody. And I think no cost is good. Let me show you what else you get. This is the Trader Lab chat. You can see there's a lot going on, a lot of interaction. Traders helping traders. You can't beat a community like that. And of course, I think the cost is right in line with what most of us like. There is no cost. And there's a lot of additional education. Stocks, options, crypto, order flow with a high-tier tool like Bookmap. And here's our library of webinars and things you can download. I have videos in here. They're up to 4 hours long of real-time narration. You can enjoy those. It's very nice to watch those, especially on a weekend. You can learn a lot from those, plus the Trader Lab. And structured trades you can download. There's 60 PDFs. So anyway, we're still trying to get over here. So that's it. Got nothing else for you today. I hope you had a good day today. You always have to trade with a plan. You have to understand it's random, and you need to manage your emotions. It's not easy, but it can be done. Typically, what we're doing is we're typically always trying to fix a process that might not even be viable in this business. We come into the business with beliefs. The question for you, and this is why another reason you should come to the Trader Lab, is what you're doing actually aligned with the reality of this business, or are you just trying to curve fit indicators and time frames and then assume that somehow that's a trading solution? Now, it might be, but I wouldn't say most retail traders are on that path, and the lack of success for retail traders is substantial. So if that's what they're doing, you might ask yourself, is that something that makes sense for you to continue doing? Thanks, guys. Thanks for visiting Trader Lab today. Please give a like. Appreciate your support of the channel. Come to the Bookmap Discord Trader Lab community. Use the link in the bottom of YouTube, and I look forward to seeing you tomorrow.